James, what does it mean for, I mean, should the markets get ready for a possible, trade war for the next 5-10 years? So even if President Trump wants, a deal, we don't know who comes next or whether it is indeed this president in 2020.
I think markets have difficulty looking 5 weeks into the future at the minute, let alone 5 or 10 years. Potentially, yes, there should be some risk premia attached to various asset classes and specific companies and specific countries for the fact that, I think there is a far greater chance that this rumbles on. Robin's already mentioned the fact that, there are strategic goals at play here. And I think, even different bodies within the Chinese administration would see those as being more or less important. So I think markets should be considering that this has the potential to move on. I think one of the conspiracy theories that I found interesting and seemed to resonate with me was the idea that China would prefer to negotiate potentially with a democratic president. If that's the case, maybe the time horizon for things to move on is slightly shorter because it would then fit with the U.S. Election in 2020.
I have a million market questions. James, first of all, let me bring you over to some liquid proxies for the Chinese equity markets, which thank you to Danny Berger, we actually charted today, and it's basically looking at iShares and Xtracker's large cap China ETFs. Now, if we bring that up for you, what it shows us is that there's just heightened anxiety. I'm looking at renminbi dropping at 6.913 per dollar. Are we going to touch 7? And if we touch 7, what actually happens? I know it's a psychological level, but what happens?
Well, and for that reason, it potentially does have significance because it has a huge amount of focus among market participants. The honest answer again is that this latest sort of change, shall we say, in the trade stance is one of a number of issues that China is having to deal with, as has been the case for many years. China is trying to keep the plates spinning, and it can't necessarily have them all spinning at the same time because, to some degree that would defy the economic laws of gravity. The yuan, and this is why there are a number of high-profile investors who have used that as the expression of their bearish view, is possibly the easiest safety valve in extremis, and for that reason, it's right and proper that we watch it closely. I don't think China really wants to go there unless it has to, because we know that it has fears about capital outflow problems. So it could get close to 7. I think it's difficult to see the very near term pushing past that, but I do not discount it at all.